We have breaking news. There are going to be major changes coming to credit scores and credit reporting in 2025 that's going to affect everyone. On today's video, we're going to cover 3 major topics on major changes that are coming to credit reports and credit scores that you do not want to miss. Now, we're going to start at number 3 and work our way down to number 1, which you do not miss, but I also have 2 bonuses in there because there's a lot to cover as so many changes are happening very fast. But before we get into this video, make sure that you smash that like and subscribe button so this video gets out to more people so everyone can stay informed about these major changes that are going to be happening fast. So let's go ahead and jump right in because we have a lot of ground to cover today. Now let's put number 3 up on the screen right now. Buy now, pay later loans will soon hit credit scores, and experts think Gen Z could be at risk. I mean, it's not just Gen Z, it's everybody. It's literally everywhere you turn. You can buy something at Walmart and put it on buy now, pay later. You could buy a flight and do a buy now, pay later, which I recently saw. And you can also buy concert tickets with it now. I mean, literally, you could buy food with it. You can use DoorDash now and different food apps to order food or your groceries with buy now, pay later apps. And listen, the first thing people think is, well, it's great, it's gonna help build my credit. No, not so fast. So go and pump your brakes real quick. And let me truly break it down for you because a lot of people don't understand how these can truly destroy your credit score. Now let's put the chart up on the screen. It says breaking down your credit score because I really wanna break this down so you can have a real full understanding of how this truly affects your credit score because nobody's really explained it to you. Now understand, I have 51 credit cards, so you don't have to. Now, this is not a good thing. This is nothing to brag about because I don't need all those credit cards, okay? It's not necessary, but I get them to test them to see exactly how the banks are, how they react, how they give you credit limit increases so I can come back and give you the information. And I'm over an 800 credit score. We could put my score up on the screen right here so you can see that that's how I know what I'm doing. I know how to manage my entire credit profile. But one thing that nobody talks about, everyone wants you to get a credit card. They want you to get this new line of credit. They want you to do this. But understanding something, every time you add a new line of credit to your credit profile, it lowers your average age of credit. Let's target this section right here. Credit age is 82.5 points, and it only makes up 15% of your credit score. But here's the big but. The more you add to it, the more it hurts your credit score. And you need the account to have length open. That means the account has to stay open for a significant amount of time for you to actually pull age of credit out of it and payment history as it's shown on the chart. Payment history is one of the most valuable things because it's 35% of your credit score. So the more payments you have and the longer the account is open, the more positive impact it has on your credit profile. I know that's a lot, but I just had to tell you that. Here's the problem with buy now, pay laters. They only usually run 6 months or 12 months. There's some of them that run all the way up to 24 and 48 months. Now, those are decent. The ones that go all the way to 48 months, not so bad because remember what I just said here. You want the positive payment history to build up your credit profile and stay open as long as possible. That's why an old credit card that's been open for 25 years is very valuable because it's building up all of that positive payment history and it's keeping your age of credit long. But say for instance, you go and you get a buy now, pay later for a plane ticket, then one for some groceries, then another one for some clothes, and then another one for something else. You see what I'm saying here? Like you just added all these small different lines of credit to your credit profile, lowering your average age of credit. You want your average age of credit to grow past 5 years. If it keeps staying below 1 year, because every time you add it, it reduces it. Every time you reduce your average age of credit, you are deemed a high risk borrower, which means you're going to have a lower credit score. And we don't want that. So I want everyone to understand that these are very detrimental. They can really hurt your credit and you need to buckle down because now they're going to start showing on your credit reports starting in the fall of 2025. This article really broke it down and told us exactly what's going to happen and how they really don't know what they're talking about. Because even reading the article really pissed me off that somebody wrote this article and has no clue what they're talking about with credit. Like, oh, it's going to be beneficial for your credit. No, it's not. Stop talking about things you don't understand and miseducating people out there about this because, of course, it's most likely someone that is being paid by the lenders to make you think this is beneficial to your credit profile, and it's not. Always remember, your accounts need to age. The longer they stay open, open, the better. Because when you open up a buy now, pay later, if it only stays open 6 months or 12 months and then it closes, it has a negative impact on your credit profile. So the moral of the story with buy now, pay laters is stay away from them because they're going to start destroying credit profiles. They're going to do more harm than help. Now, moving on to bonus one of the two bonuses we're going to talk about on today's video. Crypto is pushing into the finance/credit sector. You are going to have the ability to use your crypto as an asset to purchase a home moving forward. Now, let's put the article up on the screen so we can read this sector. At the end of June, the U.S. Federal Housing Finance Agency issued a new directive instructing both Fannie Mae and Freddie Mac to count Bitcoin as an asset on single-family home mortgage applications. Now, previously, mortgage applicants had to convert any Bitcoin holdings into US dollars if they wanted their crypto to count. Now, it doesn't just stop there because crypto has already pushed into the credit card world with the Gemini card. Now, this isn't a plug for them. The Gemini card, I already have this. Instead of getting points and miles, you get crypto. Now, American Express is also doing a co-branded card with Coinbase that is set to release in the fall, and we'll cover that more, but this is a huge, huge sign that America is truly trying to turn into the crypto capital of the world. Now, moving on to number two, which is one of the biggest one of all, and I've been a huge proponent of this for years. Now, today on July 8th, when I actually shot this video, is when Pult made this massive announcement on his Twitter account /X, whatever you want to call it. People are actually still on this. Like, why are they making announcements on here? Like, why don't you do a real press release with a lot of real information? Because they're just disseminating it and they're actually coming up with ideas as they're moving along, which is just wild. But this is still a huge deal. Don't let me take away from that. So Pult. Who is Pult? Pult is the actual director of the U.S. Federal Housing Finance Agency. He announced, my order, thanks to my boss, POTUS, will allow for Americans to use their rent to qualify for a mortgage. Credit history will no longer just include credit cards and loans. This is huge. Which he's right, it is huge. This should have been happening decades ago. As much as you pay in rent, that should go towards you trying to qualify to purchase a home. If you've been able to maintain those rental payments on time, why would you not be able to qualify for a home? But here's the part that I don't understand is how they're going to integrate this, because this is a huge, massive story. Americans can now use rent payments to qualify for a mortgage, the FHFA says. So they have to include this in Vantage scoring and in FICO scoring. Now, FICO is privately owned, as so is Vantage. So they're going to have to kind of muscle their way into that to force them to do that. So then when they pull your credit report for mortgage lending, they can actually see it on your credit reports. Because previously, there was no actual listing on a credit report for how it reports. It shows up as an actual miscellaneous on your credit reports, which is not normal. It should just come up as some type of lending product. But again, rent isn't a lending product. So as more moves on about this, I will continue to cover this story and bring you more information to give you more details on how this is going to break down so we can see how people will truly qualify with their rent reporting, helping them get access to buying their own home. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using DisputeBeast, the most advanced AI credit repair software ever created that comes with a 110% money back guarantee. But specifically to Kenneth. Kenneth's credit score went up 282 points after just one round with DisputeBeast. And Arthur's credit score went up 670 points after just 2 rounds with DisputeBeast. But let's not forget Destiny. Destiny's credit score went up 264 points after just 1 round with DisputeBeast. DisputeBeast's link is going to be in the video description and pinned at the top of the comments for anyone that needs to fix their credit. Now, moving on to bonus number 1. Let's put it up on the screen. The Trump administration silently employs Palantir to gather personal data of each American. Yes, you heard that right. You're like, but what do they need all that information for? To build a social credit score. Think of it like this. Everything you do and say and how you react on social media is being tracked and stored into a database. So if you talk crazy on social media, it could affect your actual career or trying to get another job, which is already currently being used, but a lot of people don't talk about it. You could be potentially flagged as a high-risk borrower to lenders based on your social media activity. But it doesn't just stop there because, I mean, everyone's like, well, maybe I'm not on social media. I don't care. Also, think about this. They can get access to your bank accounts and see what you're spending money on, and if they choose to, they can cut you off whenever they want. You know, there was this big hoopla about Doge getting access to Social Security information, to Medicare information. Why do they want all this information? So they can can put it into one massive database and track everything you're doing. Literally giving the government massive databases, including bank details, student debt, medical claims, medical debt, disability status. They can literally see everything that's going on in your life and stop you at any point in time they want, or just create that social credit score to give it to other lenders, other institutions, other career opportunities, and just stop you dead in your tracks. A social credit score is definitely on the way. And like I just said, employers are already using this to track future possible employees to see what their activity is, what they're actually watching on social media, what they're commenting on, how they're reacting to other people. Employers want to see this. This is valuable data to see if you're going to be a reliable employee, and better yet, a better candidate to get potential lending options. Last part's the most important. Now moving on to the biggest story of all. Let's put it up on the screen here. Number one, the CFPB reverses position on removing medical debt from credit reports. Yeah, we talked about this, moving it into like January and then February and then March, as a new rule came into play that would remove all medical debt from credit reports permanently. And then this happened. Now let's scroll down to the middle of this story where it says, in a motion filed at the end of last month, the CFPB joined the Consumer Data Industry Association and the Cornerstone Credit Union League to request a judgment holding unlawful and vacating the medical debt rule because it exceeds the Bureau's statutory authority. Now you're probably asking yourself, who's the Consumer Data Industry Association, right? So now let's put it up on the screen so you can see exactly who the Consumer Data Industry Association is. We're going to scroll down a little bit. You're going to see right here. The Consumer Data Industry Association is the voice of the consumer reporting industry, representing consumer reporting agencies including the nationwide credit bureaus, regional and specialized credit bureaus, background check companies, and others. Basically, it's made up of all of the actual CEOs of all of these credit reporting agencies. They are in the best interest of the CDIA. Now, the CDIA made what's called Metro 2 compliance reporting. The entire way that every single lender is supposed to actually report everything on your credit report is structured in Metro 2, and the CDIA actually helped create it with the help of other lenders. They all work together to manipulate the entire system in their benefit. So it's in the best of their interest to help push this lawsuit forward with that credit union association also to try to get all of this medical debt back on credit reports to continue to allow Americans to drown in debt so they can drop your credit scores so all of these lending institutions can benefit more, because then you're a subprime borrower. Once you're a subprime borrower, then guess what? They can charge you higher interest rates. Now, I'm going to put the link in the video description for the litigation tracker so everyone can see exactly what's going on with this case. As of right now, it is still waiting on a decision from the judge in the District Court of Texas Eastern. So this is a long process. I'm guessing that by the end of this month of July or towards the middle of July is when we are going to get a decision on what is going to happen. And I'll be honest with you, this has never ended well for any situations for consumers of any cases that will help consumers in the Texas court systems. Because the Texas court systems were the ones that actually blocked the Biden rule to stop late fees and junk fees on credit cards. That's where the whole thing went awry, and the Texas judges went against the Biden administration and basically shut it down. So now you still have late fees and junk fees on credit cards. Now, what does this mean for people's credit reports that have medical debts? It means that there's a huge chance, more than 90% chance, that all of that medical debt is going to come back on people's credit reports and just destroy Americans' credit scores with medical debt that was previously removed. Now it's going to come back and hurt you again. Now, if you are someone that had medical debt removed from your credit reports because of the new rule going into play, but then all of a sudden it popped back on your credit reports, let us know in the comments, because we want to keep everyone aware of these massive changes and who has actually been affected, because we have seen medical debt pop back up on people's credit reports that was once previously deleted by the credit reporting agencies. So it's not a good sign. And the biggest thing to understand is don't panic. You can fix the situation. You can dispute the hell out of it, because it has to be accurate, complete, and fair. Now, a lot of people say, well, what do I do when the letter comes back and they say it's been verified? Verified means nothing. Understand, that is an automated response to keep you down and be like, oh my God, I'm done. I have nothing else to do. No, you can dispute it again. You can dispute it as many times as you want. Now, generally speaking, it takes 4 to 6 rounds to get something off the credit report. That's just the warm-up phase. Some people can get it off between 1 to 4 rounds, but everyone's gonna vary depending on the item and how it's reporting. And people always ask me the question, but what if it's reporting properly? I'm gonna tell you right now, there's not one single account on your credit report that's reporting 100% properly, because none of these companies abide by the Metro 2 compliance reporting standard. Because what you see in a credit report is completely different from what I see on a credit report when I'm looking at Metro 2 compliance reporting. There's missing data entries, there's missing dates, there's all kinds of missing data inside of your actual credit reporting system that they don't want to admit to, but we expose it using Metro 2 compliance reporting. That's how we destroy these items and get them off of credit reports. It is 100% possible. I'm telling you, I've been doing it for over 14 years now. So I hope you enjoyed this video. We covered another big one on the massive changes that are coming to credit reports and credit scores in 2025, so you always stay ready. Now, if you have any collections or charge-offs that you need to delete from your credit report, make sure to watch this next video right here, because it's going to teach you how AI can do it all for you, and it comes with a 110% money back guarantee. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.